Thanks for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. Kind of weird things going on here in the markets, and we have all kinds of outside market influence. For one thing, I will say that we did not have any overnight export sales to announce this morning, so we haven't had too many of those days in the last 3 weeks. So quiet there, and when you don't have that daily news feed of corn export sales, and remember how the last few times we had overnight export sales of corn announced, the corn market didn't really respond too much. Well, today, without any support, corn market is kind of fading here. I want to take a look at some of these quotes provided by bar chart here. And on the corn board, we'll start there with our quotes provided by bar chart. We do have the corn under pressure. You know, we've kind of been this way just about since the opening bell this morning. May corn is trading at 651 and a quarter right now. That would be down 6.5 cents. And December down 5 and a quarter now at 562 and a quarter. I know it had been testing that 570 mark for quite a while, and now that's kind of a distant memory the way it looks. Now on soybeans today. Here you have the May contract on soybeans down 7 and a quarter. We're at 1514 and 3/4. That's within 3 cents of our low of the day. We're now off of our earlier high last night by about a dime. And we have November new crop soybeans trading at 1317 and 3/4. So that would put us down 15 cents on the day. Now, I understand Brazil, with their soybean harvest, is now about 74 to 76% complete already. So they are kind of coming down the home stretch already as far as soybean harvest. Now let's see about the wheat trade. What's going on in wheat? Wheat is kind of settling down in Chicago. May is up 1.5 pennies at $6.95 after it got up over $7 last night. So it's kind of getting a little weak in the knees here now. On the hard red wheat in Kansas City, May is hanging in there with a gain of 3.5 cents. We're at 878 and 3/4. But it's about a dime off of our high from last night. Now on Minneapolis wheat, the spring wheat, May is 5 1/4 higher at 897, but it was at 903 overnight. So those psychological benchmarks are worth watching here. In the cotton, we're starting to fade away now. July down 112 points at 81.52, and December down 122 points at 81.70 per pound. So that would put us off of our earlier high, which was at 83.30 in the overnight trade. Interesting stuff going on. We have Brian Hoops on the line. He's with Midwest Market Solutions. And Brian, thanks for joining us here today. All kinds of stuff going on. In fact, we were talking in the last segment about what's going on with the gold value. I want to take a look at that too. It was like $37 higher last time we checked. Well, now they're adding to it. May gold up 39.20 right now. And look at June and August. They're over $40 higher. June is up $40.10 at 20.40. A lot of buying of gold today for some reason here, Brian. And from what I understand, the bond markets are on fire too. So how does that all tie in here with the grain trade?
Yeah, gold and silver really taking off to the upside. Silver is breaking out as well above some continuation chart resistance. The dollar is weak, and that's a part of what's going on. But also, you know, it's kind of a flight to safety, so to speak, because of concerns about the longer-term health of this economy. We have, crude oil prices breaking out to the upside, which, is good for crude oil traders. They like to see a bull market there, but it doesn't mean anything good for our economy. And I think, it's the stock market's starting to weaken as a result of that. The fact that gold and silver are moving higher, it tells us that inflation is alive and well in the United States, and that should bode well for our grain markets going into this quarter as well. So I don't think we want to be deceived by prices moving lower today. It feels like maybe markets trying to react to a change in the weather forecast longer term that may not give us a lot of planting delays, but you still have to look at the big picture here. And if December corn tests that 550, 560 range once again, probably that's a buying opportunity going into the summer months. I don't know that we've made our highs for the year, especially as we've been talking about this inflationary markets. I think there's good opportunities later this spring and into the summer for the grain markets to rally off of weather issues, weather concerns, and then maybe post some highs for the year. But I wouldn't look for it to occur at this point in time, just based off of what we're seeing, as far as tight stocks around the world, ongoing drought in Argentina, and what's happening in the western part of the United States. The hard red wheat belt still remains very dry, and the crop ratings are the second lowest since 1996.
Well, let me ask you this. If there is a big fear of inflation, which ag commodity do you think would benefit most from what could be considered an inflation bomb?
Well, I think the first ones, if you consider gold and silver ag commodities, those are the two that come to mind right away. The other ones, I think, is probably going to be like corn is going to be considered one of the first things to step in and buy. As far as the hedge funds, if they're looking to lock in some sort of an inflationary hedge, I think corn is one of the first things they'll go to. It used to follow crude almost perfectly. It hasn't for some years, but it could continue to follow the crude oil market higher into the summer months.
Oh boy. All right. Tense times coming here in 2023. Brian, sit tight. We'll come back in a moment and we'll talk about the livestock trade next. We are back with Brian Hoops, and we're talking now about our livestock trade. In fact, let's dive into our prices, and our quotes are provided by Bar Chart. On live cattle futures here right now, we have turned lower. Remember how we were higher earlier today? Well, now you have June live cattle down 2 cents. Technically down 2.5 cents. That's one tick lower at 161.20, and the August down a dime at 160.65. Now, if we go over to the feeder cattle market here, you currently have the April up 60. May is also up 60 at 203.75, and that's it. Everything else is steady to weaker. August now one tick lower, down 2.5 cents at 220.67. September's unchanged. So things got very quiet here in the livestock side, and lean hogs have flipped around and gone lower. Look at May. Had a high of 85.30 this morning, and now we're at 83.85. We're $1.50 off of that now, and we're down 52 cents from our close yesterday. Now we're within 30 cents of our low of the day. In June, lean hogs are down 15 cents right now. All of a sudden, attitudes seem to have changed here in the livestock trade. Brian, we were talking a little bit ago how the gold is continuing to rise higher in the last hour of trade, and now the livestock are just taking the opposite tack. I have a feeling that inflation is not necessarily good for the livestock trade.
Yeah, I agree with you on that respect. The livestock market's very heavily dependent upon demand, consumer demand especially, for their price discovery. We're very heavily looking towards consumers buying beef and pork and getting out and grilling this year for these prices to remain higher and to move higher. And if we have inflation that increases the prices of steaks and pork, chops, and that sort of thing, it's going to hurt our demand, and that'll undercut our prices. Also, I think we alluded to this last week when we were talking on Friday. Some of the packers were very aggressive last week in buying, and I think that is representative this week that they're not going to be very strong in the cash markets. The show list numbers are over 13,000 heads larger than a week ago, and I think that did pressure the futures yesterday. And just the fact that the packers only have a couple more days to buy cattle this week and don't seem in any hurry to be buying anything probably tells us they're going to wait until next week to try and accumulate any inventory that they need for a kill for the next several weeks.
And just wanted to point out, while the precious metals are surging today, look at the Dow. June futures on the Dow have now gone lower by 221 points at 33,571. Had been up to 33,877 early on today. Brian covered a lot of ground. Thank you so much for talking with us. Brian Hoops of Midwest Market Solutions. That's the latest here, Suzanne. Very active markets today.
Yeah.
Flip-flopping around.
Gold,
like
silver,
carp out of
bonds.
water.
And a lot of people kind of figure out what they're going to be buying, of course, as far as proteins as we head into this holiday weekend and what it's going to cost them when they head to the grocery store. So.
And we're getting toward barbecue season.
Yeah, a lot of planning ahead. Thank you so much, Marlon.